So welcome back. We are going to start the second session of this afternoon. So we have a presentation now of big data in motor insurance, later on about Land Transport Authority of Singapore data visualization, and then the last one will be COVID-19 data monitoring and analytics. So I can see Jack is here already. I'm going to rapidly introduce him. So Jack is chief actuary of Singapore-based full-stack InsurTech startup Igloo. His passion is to connect the insurance industry with the digital economy using the latest technologies, offering better product to the underinsured economies in the region. So Jack, I can see you're presenting the slide already, so the floor is yours. You're on mute, Jack.
Okay, can you hear me now?
Yes.
Okay. So yeah, so thank you for everyone. So it's an honor to present here the SAS Super Week. So I think big data has been a trending topic for the last few years. And with the development of InsurTechs and autonomous vehicles, and we see some disruptions in the motor insurance industry, especially in the US. So I'm here to present some background of the technologies that we see and some innovative products. So our society can also catch up with the latest developments in other parts of the world and hopefully try to launch some new products in Southeast Asia. So my company, Igloo, is works across the whole region. So we have office in major economies in the region. But when we look at
you are on presenter view. I don't know if you do that in purpose. You can see your notes.
Oh, okay. Yeah. So should I just present it like this?
As you want.
Okay. So sure. So a little bit background of where we are, right? So some from Igloo, the InsurTech in the region. So and we developed the complete pipelines of the whole. We developed complete pipelines of InsurTech products. And for motor insurance, right, we just launched a very new product in Thailand and implemented some technologies, very interesting technologies in the region. So we do see that Thailand is one of the more interesting markets that we can do some products there. So for the insurers, if you're interested, probably we can start to develop products in Thailand. And a bit of background from me, right? So I did economics in school in undergraduate, then did mathematics for my PhD. Then I joined Munich Re for as a work. Then got my fellowship in the Society of Actuaries. Then joined Igloo as a InsurTech startup. Then learned a lot of technologies as from about cloud, InsurTech, and everything. So yeah, so then back. Maybe it looks a bit weird. Let me just share. Let me just share this. Probably it's better. Okay.
Yes, it's better.
So, yeah, it's better now. Okay. So yeah, so then I'm just going to touch this in the exactly same order, right? So first we cover a bit of background for the usage of insurance. Then we cover a bit of business model of what is about usage-based insurance. Then we talk about what does big data mean for actuaries, and we talk about what kind of data source we're looking at and how kind of APIs we can get to link all this data. And then to launch a product, we see how we can how the insurers can work with the startups And finally, we cover some ERM and data governance concerns. Okay, so then first for the UBI insurance. So the economic model is quite straightforward. The idea is really the better savings for the customers. So for the portfolio, then we definitely see some more patient customers who drive less with lower risk, and some more aggressive drivers who drive more with higher risk. But the problem is we don't really know who they are without proper tracking. So then we are forced to charge a fixed premium for almost everyone. Then when it's mandatory tariff, then we are kind of making a profit from all those who are lower risk and making a loss on all those who are higher risk. And we hope that the profit is good enough to cover the loss and we don't profit on these products. But if such a products are non-mandatory, right, we do see a problem. So the customers who are lower risk, they tend to opt out. So they will not really join a program. So then the fraction of profitable customers will just decrease. But all those more higher risk customers were more likely to stay in your portfolio. So then you'll end up in a loss-making situation. So then you'll be forced to increase premium. But the further you increase premium, the more likely that the lower risk customers will opt out of the program. So then you're in a worse situation. So then a few startups and insurers and InsurTechs are trying this usage-based premium approach, where the premium reflects the risks of your driving behavior. The key advantage of this approach is that some customers may like the program, and some customers may not like the program. So they will probably opt out. But if you charge the premium right, you don't really care that much who opt out of the program, because for each customer you're charging a fair amount of profit. So then it's less significant than the previous case where all the low risk customers will opt out of the program. So when the program is non-mandatory, then we believe that this usage-based program is more suitable. Okay, so then we talk about a few products and data of what we see in the market. So first of all, I would say this is probably launched a few months ago, where Amazon in India, so they launched this auto insurance on Amazon. So basically, you can buy the insurance on Amazon, and this is quite interesting because nowadays we all are quite familiar with Amazon, Lazada, and Shopee, right? I mean, people can talk about what kind of e-commerce platform they like and compare about them. But then you don't really hear people compare about insurers. And so the branding element of all these e-commerce is much stronger than the insurance companies. So then I think Amazon is trying to make use of that to distribute these kind of products. So, I mean, the product is nothing very fancy. Of course, they offer no paperwork, 3 teams serving, and all these actually, I would say most insurers can offer something equivalent. But Amazon is using their marketing channel to distribute the products. And also they are working with InsurTech. So I would say that's to address more of regulation concerns. Then there are a few business models of InsurTechs in the US. So first one is Root. So Root is InsurTech just got an IPO a few weeks ago, a few months ago. So their whole idea is that better driving equals more saving. So the startup will ask the customer to install an app on their phone. And while the customers drive the cars, the app will track the movement of the car. For example, I mean, how many minutes you drive, how many miles you drive, and there's any sharp brakes or sharp turns and everything. So they will monitor your driving behavior. And once they finish monitoring the driving behavior, they will quote your premium. So then you will be paying the premium for the rest of the year. But for the rest of the year, you don't really have to use the app while you drive the car. So they track your behavior for 1 month and quote a premium. So then the premium will fix for the next 11 months. And this startup is kind of very successful. They raised $700 million US dollar IPO in October. But then we also have another startup called Metromile. So Metromile is doing something slightly different. So they install a device in your car. So, and they use some ways to make sure that the device is always installed. So for each customer, they quote a fixed premium on the fixed per mile premium for the customers, right? So basically, the whole idea is less driving equals more saving. Of course, they don't quote the same premium for every customers, but once they quote you a fixed premium per mile, this number doesn't change for the whole year. The advantage is that they have all the movements of a car, so they track like 24 hours a day if they want. And the disadvantage is that some customers may not really want to share this data of where they go. But this brings another benefit that because there's a device, so in countries where cars are very often stolen, it's easier for Metromile to help you to get a car back. So I would say these two are the most successful internet models in auto insurance. And we do see a few more coming, but they're either using the root approach with no device or using a Metromile approach with a device. Okay, so then in the third model, we do see another trend that car makers are trying to enter into the market. So I believe you know that we hear a lot of, you know that Tesla is trying to set up some kind of InsurTech insurance broker business. Some people say it's because Tesla cars are too expensive, the insurance is too expensive, so they want to do it themselves. And others believe this is a real threat of the insurance industry because Tesla is a very, very tech company and most insurers are much way behind in terms of technologies. And also Hyundai Motor is going to set up an innovation center in Singapore. So probably we want to approach them and work with them to launch some products with them all the way from beginning when they made the car. Okay, so then let's come back to the traditional case, right? So this is one of the examples I got from a local kind of well-known, more convenient insurer, right? So I put some data, I provide some data to this insurer, and basically they're the green text. So once I input the green text, I can get a quote. So all these text is actually very, very little data. So basically, I only provide them something like 50 bytes of data, and they can give me a quote. I only have to do this once a year. So that's about 500 zeros once if you manage it properly. So I give the insurance company 500 zeros once, they can give me a quote. So I mean, on the 1 gigabyte of storage, you can store probably 20 million such quotes, such information of what car I have and which year is it, and so on. So the data is very limited, and this level of data, you can do anything. You can download the whole portfolio in a local machine, or even in an Excel file or something, and analyze that. So then you can build a model. So this is quite straightforward, and this has been how we work on the pricing analysis of motor insurance for a very, very long time. But if we look at root, so recall that root has use a handphone to track your movement, right? So then there is kind of a device in the car to track the movement. So this device can track the directions. It can track the speed of the car. What's the acceleration? What's your gravity? So it knows your phone is facing up or facing down. And what's the rotation of this device? So they know you're turning. And so they also know the rotation acceleration. So they also know how fast they're turning. And of course, the handphone has a GPS, so they know the longitude and latitude and time, right? And the handphone can track all this information in real time. So that's about 100 bytes per data point collected from handphone. And maybe, I mean, so to track this data, actually, probably you want to track 10 data points per second. So then you will know if the car is moving on a bumpy road or a normal road or something. So if you do this for 2 hours a day, right? So you'll be collecting probably 20 gigabytes per year just for one policy. So then that's equivalent to 400 million quotes in the previous case. So you will see that the data requirement for routes is about 1 billion times bigger than the traditional insurance company. If we look at the Metromile case, so Metromile has a device in the car, right? So the device kind of can get a bit more information from the car because it goes through an OBD port, so it's a car maintenance port. So this port can get some more information from the car. For example, what's the altitude of the car, what's the total mileage of the car, and some oil line, tire, pipe, and pressure information, some battery information, engine information, and some like speed of the car from the speed from the car, and some kind of diagnosis information. And with this kind of data, you probably get 50 gigabytes per year for one policy. And so that's really 1 billion times more data than a traditional policy where you just provide a car model, year, and some of your personal information. Then so this kind of new devices produces 1 billion times more data than the traditional way. Then of course there are other ways to get information. So here are some more examples. So for motorcycles doesn't really have that kind of ports where you can install a bigger device. So you have to install a much smaller device. So, but this device won't have a lot of information, but it has a GPS tracking there. So for motorcycles, you can do this. You can install this device in motorcycle, track where they are, and if the motorcycle is stolen, there's a higher chance you can get it back. Or you can have a mini GPS tracker in the car. So this GPS tracker, the battery can last for a while, depends on how you configure. So then it's not really attached in a port of the car, so it's less visible. And some more interesting devices are like some device provider provide a device that looks like the power from the power socket. So it's a bigger power socket, so you can get it from there. So customers may not feel there's a device in there, and you can get data from there. Or it's also possible that you can use an app to read some readings from the car. So you can use the app to track how many miles you drove last year, last month, and give a quote. So in all these ways, you can get more information from the car. But the amount of data you get is much significantly higher than the traditional way where only give a few tests and get a quote. And also, of course, for automatic vehicles, right? So for this kind of automatic vehicles that the tech giants are testing on roads, so they will generate probably 3,000 gigabytes data per hour. And that's more data any personal computer can store locally. So you will see that if we insure some autonomous vehicles, the amount of data generated is way beyond the capacity of our current systems. So then the question is really, are we ready for big data? Are we ready? There are 3 questions. So the first one is, are we ready to receive so much data, right? So, I mean, forget the problem of how much data generated from each car. There will be thousands and millions of cars running on the road at the same time. So do you really have a system that can connect to all these thousands and millions of cars in real time? And it's not a very easy question. I believe most insurers' homepage will crash when a few thousand users log onto the portal at the same time. So the second is where to store data. So the data from all these devices and autonomous vehicles is not in gigabytes; it's in terabytes and petabytes. So then you definitely need a cloud system to store all these data before you can analyze them. Then the third question is about process of this data. So will you use a physical machine? So probably you have a data center in locally, or you can use one of the clouds to analyze all these data. So first, for receive and store data. Maybe you have a very good boss and set your budgets, and you can buy a commercial solution. So it's convenient, but maybe a bit more expensive and less flexible. Depends on who you approach. Or maybe you have a very good IT team. You have a very good IT department. You can develop in-house, more flexible, but you definitely need a very strong IT team. And for most insurance companies, I would say it's a bit difficult to hire an IT team locally. I mean, I would say most good engineers would prefer to join Google, Facebook, Shopee, or even ByteDance, Tencent. So it's a bit difficult to attract talent for insurers. I mean, even for InsurTechs as well. So then there were cloud solutions provide you with all the complete system, and they have a support to work with you to develop all these systems. So the beta guys are Google Cloud, Microsoft Cloud, Amazon Cloud, and I believe Zhong'an is probably doing some cloud solution. So you can migrate your system to cloud to enable this system, to enable this automated vehicle tracking. So then here's a question of process data, right? So if you decide to launch such a product, how do you process data? So this is one of the examples of the data we collect from one of the cars in Thailand. So, but this is test data, so it's nothing sensitive in there. So every day, if you decide to launch this product, every day, every device, you receive this kind of data, right? So this is very, very unstructured compared to the agent general information we receive in a common policy, right? So there's no way to use this data directly. So you definitely have to process something. So if you collect all this data and process, probably you will get something like this. You will see a heat map. So within a city, I mean, which areas are higher risk, and if the customer only drive within these areas, probably you want to charge more premium. And if the customer don't drive in these areas, then probably you will charge less premium. Or, I mean, if the customer drive at the midnight through some very dangerous zones, you want to charge a bit more. And if the customers drive in the rush hours, then probably you want to charge a bit more or less. Depends on how you structure the product. But then still, this data is, I mean, this time heat map is better, but still you need some better ways to analyze this data. Okay, finally, for all these automated vehicles, I mean, you know that they're generating like 3,000 gigabytes of data every hour. So they are collecting these kind of data to you. And these data are just extremely difficult to analyze. And it will cost a lot of money to build a pipeline to analyze this data and to improve the effectiveness of the model. So maybe ultimately, you collect all this data and you just extract a few information, like how many kilometers the driver has traveled and how many miles have the drive. And you don't want to do it anymore. So, but if you only collect these kind of data, right, it doesn't make sense for you to develop all these very complicated pipelines. So before you develop these products, you need to understand the investment in all these data pipelines. Is it worth the return? So if you only collect mile and hours if the mile and hours are the only factors in a pricing model, you may not want to build a whole pipeline because it costs a lot and it's very expensive, and also takes a very long time to develop. Okay, so except for all these information you collect from car, there are also some external APIs in that. So here's an example from Google, because I mean, we all use Google as normal customers, but they also have some more commercial solutions where, for example, on the corner here, you submit a photo to Google, the Google will tell you what are the objects in the car. For example, if you submit this car model, you will see it's a car, see a few wheels, you'll see a license plate. And if you submit a test to Google, Google will tell you, Google will try to analyze this test. So for example, I will say I'll travel from Singapore to Malaysia, you will see Singapore and Malaysia, two keywords as locations. And also, if you input a latitude and longitude, the Google will tell you what kind of city is it, and where is it, and what kind of place of interest in there. And you provide 2 points from A to B, as in Google Maps will tell you what's the expected travel time. So, I mean, if the car reached the destination very extremely fast, probably it's overspeeding. So then all these cloud APIs you can do, if you have your own IT team, you can do all these to improve your model and your pricing and claim process. Okay, then it comes to product development. So I would say for most insurers, it's a bit difficult to do all this in-house. You may have a tech team, but probably it's in headquarters. You may not have a very good tech team locally to help you solve a very local problem. So personally, we are a startup and we work with a lot of insurers. We feel that it helps both ends. So we help the insurers build better products to launch the product faster. And within this experience of working with the insurers, the insurer can also learn a lot from us on how to develop an InsurTech-driven product. So say from my experience, the insurers are very good at a few points. For example, the insurers have a lot of historical data that the InsurTechs don't have at all. And the insurers are very good at risk management. It means a bit slow, but also the InsurTechs are more focused on pushing the products, making a line, test the market, but less on risk management. And also the insurers have a lot of expertise in product knowledge, understand how motor insurance work, I mean, what are the loopholes that customer may try to get benefits, and what are the requirements for each country that, and all these the InsurTechs may not know so much. Then for the InsurTechs are good at cloud technologies because there is no legacy system. So a company can start from the cloud from day one. And InsurTechs are more focused on the user experience. So say you see all these tech giants, the app developed from them are just looks better and more convenient. And most apps developed by insurers, by some insurers, are kind of less user-friendly. Of course, there was a regulation element in there, but I would say the InsurTechs are generally better in user experience and also in product delivery. So your InsurTech developed product it will be launched typically in 2 to 3 months time. So the InsurTech can launch a product, at least a minimum viable product that is good enough for test users. But 3 to months time in the insurance company mostly is just enough time to arrange your first meeting. So if the InsurTech and insurer work together, then the insurer can provide a product, provide a policy wording, provide the risk management guidelines. And the InsurTech can provide a platform and integration and app and interface, and also implementation. So by working together and transfer data to APIs and FTPs, so the insurer can typically launch a new product in 3 to 6 months with an app, with a system and everything. So if the insurer want to develop the whole everything themselves, it will usually take way much longer. Okay, so give you a few background of how InsurTech works, right? So this is really a InsurTech background system. So in the InsurTech cloud, there was risk profiling, there was dynamic premium, fraud detection, automated process, big data, machine learning. I mean, all these the InsurTech players have in-house. And this is their core competencies. And because they start from cloud in day one, so it's kind of convenient for them to develop all this. And because of InsurTech, so it's easier for the InsurTechs to attract better talent, better IT talents to develop all these in-house. Then, after they have this whole system in the middle layer, the insurance company will work with them and offer a few insurance products with them and provide some underwriting guidelines. So then the InsurTech player will work with the insurer, do all this integration, put everything in a single place, and launch the product. So when the product is launched, right, the InsurTech will also build some systems like a dashboard for the insurance company to view, to visualize the data. I mean, how many policies sold? I mean, how many policies are claimed? And what's the revenue generated for yesterday, last month, or last year? And typically, all this work can be done, all this monitoring can be done in real time. So it doesn't matter how many policies are in there. For example, we work with some partners to cover like 10 million policies in 1 year. And all this data can be viewed in real time on the dashboard that is presented to our partners. Unlike in some old ways, you only receive data once a year, once a quarter, then you don't really know what's going on. So if you work with InsurTech, then you typically see data in real time or yesterday or something. So then the InsurTech will also build some system for the insurer to manage policies. For example, you need underwriter to approve an insurance policy. The InsurTech will do that. You need a claim officer to reject a claim, accept a claim, or request for more information. The InsurTech can also do that. And a proper InsurTech will have some system in-house. So for a new product, it typically takes, I would say, 2 to 3 months to launch any product. I would say to modify the existing product line a bit to tailor to the product that they're working with you and launch within like 2 to 3 months. Okay, so then come back to this, right? To do a UBI product and to analyze the data I showed you just now, the routes of the car and heat maps and so on, inevitably you have to use some kind of machine learning in there. So when it comes to machine learning, they have a problem of risk governance. For example, Singapore has just launched this risk governance AI and risk governance framework, where it requires that the AI should be simulable, transparent, and fair, and human-centric. But because it's AI, so it cannot be fully transparent because it's a bunch of coding there. So there's no way to explain all this code in a simple language. So the government is recommending to the companies to follow a few guidelines that as follows. It needs an internal governance structure. And you also need to determine the level of human involvement and operation involvement and stakeholder interactions and communications. So then they give a few very interesting examples. For example, they have an example like Grab is using some AI system to allocate cars. So when you try to grab the car, which car is allocated to you is not done by human, it's done by AI. So, and the government believes that this kind of system is a good use of AI because it doesn't really cause very much harm to the customers, even if they allocate a car that is a bit further from you. So to launch this kind of usage-based product, if you use a AI or machine learning system to price a product, you also need to make some justification that the AI introduced to the system doesn't harm the customers. It's actually it's human-centric and it's in the interest of customers. So personally, for example, if you can kind of design a system that you pick some customers and you quote a low premium to the customers, and it's probably in the favor of the customers, so it's more likely to go through this risk governance. So then there are probably other ways you think about. So the idea is the AI behind should be human-centric, and you cannot like use AI to take advantage of the customers. Okay, so then the risk governance framework, and this is how I believe the governance framework for the insurers and InsurTechs. So for the insurer, right? So by the PDPA and all the other data guidelines, you may not want to share identifiable information with your partner. You may not want to do that. Or at least you can do this to some degree to issue a policy, but not to a degree that will breach the PDPA. Depends on how you work on the product. But the car make and car models, you definitely have to share with whoever, with the InsurTech or device provider or third-party provider with that. So you definitely have to share the car model, car make and car model. Claim data is yes and no. I would say you won't really want to share all the historical claim data, but you may want to share some claim data, more recent claim data for the InsurTech you work with to twist their model, at least to figure out what are the important factors that affect claim rate. Then for the InsurTechs will not share the source code with you. Otherwise, it's a bit different collaboration model. So InsurTechs usually don't really want to share a source code. And they will definitely share a parameter with you, right? So the InsurTech, you derive something and tell the customers, I mean, either it's to tell the customer some parameters like how much premium to charge you per mile drive or per hour drive. So all these parameters are transparent. The process is a bit in between because the insurer need to work very closely with the insurer to launch this product. So a lot of process need to be shared with insurer. And for a lot of other process that is very closely related with the source code, the InsurTech may not want to share. So in the end, this is one of the recommended way to work with InsurTech. So the insurer can anonymize some data and share with the InsurTech. Then the InsurTech can use this claim data and combine with the big data they collect from the devices and UBI products to figure out what kind of parameters is more important that they can use to price the product differently and get some advantage. So then the insurers, we have GOM or some other models where they can take these parameters directly to produce new premium. So this one will be a usage-based premium. So then they can quote the customers. But because most likely you have an app or something to quote the premium and request customers, so then the InsurTech will use that and implement in the system. So this is a slightly better way to work this product out. So take advantage of the big data knowledge, the big data experience, and big data expertise from the InsurTechs, and also the claim data from insurers, and launch a product together. Okay, so let's take a look how all these InsurTechs work on this product. So for Root, right? Root is a company that uses a handphone to track your driving behavior. So they're quite transparent that the driving behavior is not the most important factor of their pricing model. So the driving behavior is probably 1/5 or 1/6 of their pricing. So which means probably a good driver will get a discount of 20%. But 20% discount is usually good enough to attract a user. So even if they're wrong by 20%. So then Metromile. So Metromile is the provider where they use a device to quote your premium per month. So they can be very, very transparent with the customer to say, I have a fixed premium per month, then how many miles, and then it depends on how many miles you drive is a fixed rate per month. So they're very transparent to the customers, and the customers can make a choice. Can do their own calculations and compare with the existing insurance product, and decide if they want to take on this and usage-based program. And usually, if the effective premium is lower, they will take this program. So this is also very transparent and to the customers. So to me, it should satisfy the government's framework. So then, how can we develop product? I would say from the insurance point of view, it's from top to down, I would say. The first one is really the strategy. So for the insurance point of view, do I want to launch a new UBI product? Because there will be definitely risk in there, and there is definitely investment in there. So you may or may not want to. Then the decision is then later, do you want to do it in-house or do you want to source for external parties? So probably you have a strong enough in-house team to do that. So you can do it yourself, and you have a very strong control and have a in-house intelligence in there, but it's probably more expensive. But if you work with an external party, so then the first thing is really what kind of targets, what kind of customers are you targeting? So then it's slightly different if you want to launch a direct-to-C product, like the Root and Metromile use a handphone or device to track the car. Or the other ways is you can work with a fleet, kind of. If you launch a usage-based products with Grab or Uber or all these food delivery companies, then they've already have some data. So you may not even need a handphone or a device to track the usage. So if you choose to use target individuals, right? So then you have to decide how are you going to track the usage of the customers. For example, you want to use an app like Root. You want to use an OBD device like Metromile. You want to use a GPS device or some you take a photo from the car. You take a photo from the car or something. So you need to make a decision on how are you going to collect data from the cars. And depends on what kind of device you use, you'll get slightly different data. So then after you understand how you get the data and what kind of data you get, then you need to figure out the fundamentals. I mean, how do I collect the data? How do I store the data? And how do we process the data? And also very, very importantly, you need to make sure that all these systems are reliable. And because, I mean, you can have a system maintenance every week or a system, I mean, sometimes you have a system breakdown, you have to make sure that this doesn't affect your customer experience. You have to make sure the system is very, very reliable. And also ultimately, after you figure this out, you need to figure out how do you satisfy the customer experience and make sure the product is transparent, the product looks good, looks fancy. I mean, hopefully it's cheap for the customer you're trying to target, and then you can launch a product. But from the InsurTech point of view, it's kind of from down to up, from the other way. So InsurTech will be thinking more about what kind of customer experience do I want, and what kind of infrastructure do I have, and what kind of app or what kind of device I want to use based on that, and all the way up, then find an insurer who they want to work with. Okay, so that is all for my slides. And if you're interested in, I mean, for Igloo company, we work with a lot of insurers in the region, and we have launched a product in Thailand. So I mean, it's almost, I mean, it's a lot of information is public, but if you want to know more details, we can have an in-depth discussion to discuss with you how we can work a product with you. So thank you.
Thank you, Jack. We are running a bit late, 12 minutes behind. So let's still try to reply to the question that were posted. You might be able to see them.
Yeah.
So you have 3 questions. So you can pick which one you want. I think those 3 are good. And you can click on answer live.
Sorry, okay. So the first one is most phone apps. To me, the first one is quite interesting. Most phone apps are already collecting data, right? I would say they are definitely interested to work with insurance company to launch some products, but also they don't really know how to do that yet. And also there is, at least in the Southeast Asia region, there is no insurer known to be like very tech driven and willing to work with all these providers to quote UBI premium. So we talked to a few insurers and reinsurers. Nobody has a product ready to launch very soon. So I would say from the insurer's point of view, insurers and reinsurers need to work a bit more to figure out if some app have the data. I mean, how can you launch a product with them?
Okay, thank you. Then you have the second question.
Yeah. So I mean, most people share data with the. I would say, yeah, the second question about the customer's willingness to exchange data, right? I would say generally in this region, at least in Asia, customers are less concerned about sharing data. But on the other hand, if the customer share data with you, right, you need to make sure that you bring some benefit to the data to the customers. So to our experience, if you can give a discount to the customers, then a lot of customers are willing to share data. but you need to figure out how can you pick this, how can you pick the customers that if they share data with you, they can give you a discount. Yeah.
Okay, and then.
So then the third question is, why does Root use data that Metro use? And okay, so I would say the third question is about Root and Metromile. What about the different business model, right? So to my understanding, Root and Metromile, they're both usage based. So I mean, of course, they mention about driving behavior, driving miles, but essentially it's the same thing. To me, the key difference is Root doesn't want to install the device on the customer's car. And a lot of customers don't want to do that, especially in US. So when the customer don't want to install a device, then you have to use other ways to track the data. So then Root comes up with this solution of using a phone to track, but then the technology is also a bit more difficult on how do you make sure the customer turn their app on while they're driving. But Metromile doesn't have that problem. So, I mean, they can make sure that the device is always in the car. They don't have to force the customer to turn on the app or anything. But the disadvantage is a lot of customers don't really want to install the device. But, so that's the point I've mentioned previously, right? So the device may provide some other benefits. For example, in some countries, car lost very often. So you have a device in your car, then it's easier for you to get a car back. So sometimes customers may want to install the device. Or you can try to introduce some other utilities of your device. For example, you can integrate a device into the power socket or something. So, I mean, then it's a good utility for the driver. Then the driver is probably more likely to install a device. And if you work with a fleet, a commercial fleet, then the commercial fleet can force all the drivers to install the device because it's not a personal car. So yeah, so that's how I understand the key difference between Root and Metromile. So they're really coming from, I would say, so that's the slides of flow chart, right? So the InsurTechs are really coming from a customer's experience point of view. So they start with the decision, right? Do I want to ask the customers to install a device? If the answer is yes, then you go for Metromile way. If the answer is no, you have to go the Root way. So they don't think all the way from top down of, they don't think in the more of insurer point of view that what kind of customer we want to target, and I mean, how can I work with them, what kind of fleet we want. So, but if you think about the problem from a customer experience point of view, then it's pretty obvious. And Root has done an IPO, and I heard Metromile is going to do an IPO very soon. So at least both ways are proven to be working in US. And if it's working in US, then it's very likely it will work in Southeast Asia. But more tailored, you need to tailor to the local markets.
Okay, thank you, Jack. So we will move on now with Kate. Talk to you later.